Hey everybody, welcome to the Middle Class Investor this week. This is Seth Martin, your host, and we are looking at the S&P 500. And let's zoom in a little bit and look a little closer. As you can see, technically we had a down week, but this action is kind of bullish looking. What's interesting is last week this action is kind of bearish looking, and then we turn around and have a very bullish looking week where we were down early and then rallied back up. We've got kind of a triangle looking thing happening here, and this may or may not be a triangle. A triangle is a very specific type of pattern in the market, and this may or may not be a triangle. It's certainly possible, but the odds really favor that we've got some sort of 1-2, 1-2 going on here, and we should, 1-2, 1-2 doesn't go forever, so we usually get a 1-2, 1-2, and then 3 should commence here. Now, it's a lower probability. Let me put it on let's just put it on a daily chart. Look at it on a daily chart and zoom in a little bit. It's possible this is like a 4 down, and then this would be A, B, C, D, E, where E might go a little higher. I'm sorry. This whole thing would be 4, in which case this would be A, B, C, D, E. So if that's the case, then we've had a rally. We should have a little pullback, then a wave 3 up to new highs, pullback, and then a wave 5. But this is lower probability because the internals during some of this action here really don't lend themselves to that scenario. That doesn't mean it couldn't happen. It's just right now the primary thought is that this is wave 1 down. This is wave 2 up. This is another wave 1 down of a smaller degree. And we've got another wave 2 up. And this could be complete, or we could get, it could be more like an A, B, C, where you got to get up into this area. Here, I'll draw a box just to make it more clear. So it could be that this counter trend rally is over, or we might get another move up into this area before we roll over and go lower. Whatever the situation, whatever the reality is, there's just a lot of risk in the market. One of the reasons this is not likely to be wave 4 is because you can count 5 waves here, you can count 5 waves here, and then these look clearly like 3s. This looks more like a 3 here, even if it's not complete. Maybe this is A, B, C, but either way, it's a 3-wave type move, which are counter trend. And so that's kind of what we're leaning to today. Now I want to switch real quick. Oh, I'm already on a daily chart. One of the things I want to look at is, if you look up here, my 50-day moving average is in blue, and then my 10-day moving average is in green, and my 200-day moving average is in red. And you can see now that the 10-day moving average is declining. It's a declining moving average. The 50-day now is declining. See how this is a declining line, this red line? And the 200-day moving average is also now declining. So we've got the major averages basically declining. And when that happens, what tends to happen, and you can see how there's a lot of congestion right in here where these averages come together. See, they're all kind of close together right here. That's not by an accident. What happens a lot of times is in a bear market, price action will come up to either the 50-day where it is right now, or the 200-day. I'm sorry. It's already gone through the 50-day. This is the 50-day. So what we might see is let's say a bar into the 200-day, and then even even maybe another bar with maybe a tail outside the 200-day, and then start coming down again. So what I'm trying to tell you is the 200-day moving average, this one right here, or this one in blue, a lot of times the market will go up to that, maybe even pierce it a little bit like it did here, and then rally down, and then pierce it here again, and then rally down. So this becomes resistance in a declining market. The 50-day and the 200-day become resistance, and later on when the trend is more certainly down, the 50-day will be the main average that it'll bounce down from. So keep an eye on that. If we even if we break through this and come up here, it's likely to be more like this situation where we just went through it and came right back down through it. But it's also possible. I mean, we could see a little breach of this area and then roll out. So, all right, let's look at yields. Let's start with the 13-week Treasury yield. People are still talking about the Fed. It's nauseating. Short-term rates have slowed down, but they're still climbing. We got a little pullback going on right here, a little bull flag. And of course, once this breaks out of this bull flag, the trend should resume, start getting up again, like so. You see the same thing on the 10-year Treasury. It's just bars are bigger and whatnot. But it looks like looks like maybe this might have been a wave 4 right here. This whole pullback right here inside of this channel, this could have all been like a wave 4, and then this is a wave 5. And if this was a wave 5, then you got a 1, you got a 2, you got 3, so 4. So we're gonna have another up move in the Treasury yields, the 10-year Treasury yield, but then we should get a pullback and probably back down into this area before we resume higher. So that's gonna embolden. Probably what will happen is this will take off, the market will sell off and run up to 3.5 or so, which will embolden the bears. The bears start selling the stock market off, and then about that time, we'll get another pullback here, which will embolden the bulls in the stock market again. So let's look at volatility. Volatility is still coming in. We've got this kind of ring down happening in volatility. But the next move up in volatility will be significant. It should surpass this and increase the fear level out there in the market. I mean, we can look at these other countries, but they look a lot like our markets. They're not substantially different than our market. So I don't want to spend a lot of time on that. Let's switch over to TOS charts, and we're looking at gold right there. And gold looks pretty strong, but we got this support, this resistance area up above. It's not too far away. Whoops, I went a little too far there. Let me do it like that. It's right around this 1420 area, and then we should see a little pullback in gold and then rally again. So gold, I think, going forward is going to be important. Silver, it looks like silver wants to outperform gold. Usually when they're not doing the same thing, one will outperform the other, and I think silver's, if you look at the percentage move from here to here, it's more significant than the move that gold is looking like it's expected to take. All right, the US dollar CAD. I mean, we talked about this last week, that it was looking like it was going to pull back to the line, and it did almost perfectly and then took off. So it could still pull back again, but it looks like a good entry right here. over this past week. The euro is it looks like it's in a move down. And the sell-off was quite violent this week, especially toward the latter part of the week. It chopped around, and then I think Draghi came out and said some dovish things about the ECB. Draghi's the ECB president. And it was kind of interesting to look at it intraday, and this happens all the time when the Fed talks. Well, I don't know if I can show you an intraday. Let's see. See if I can look at it hourly. Maybe I can look at it hourly. Yeah, it doesn't really do it justice here, but it was right in here somewhere, and I mean it went down. Maybe it was right here. Went down, then rallied back up. I mean, it just got really. Oh no, it's right here. I'm sorry. It's right at the bottom of this. Let me go back to a 30-minute. Yeah, maybe even a 15. Let's see if we can do it on 15. Yeah. So this is the area of volatility. So this was right at the Fed meeting, and it sold off and then rallied up. Whoops, that's the wrong button. Where's my go forward button? Oh, here it is. So it rallied up, and then you can see it. Boom. And it went down. So, Draghi talked, it was sounding good, and then, people came in and sold the euro right there and just kept selling it. It's down pretty far now on the euro. But as we speak, I think the near-term bottom is in, and we've got like a counter trend rally going on right now. Let's look at the 1 hour. You can see it right here. Looks like maybe this was A. We should get a small B and pull back, and then maybe back up in here to 122 area to where it was in that volatile period around the ECB announcement. I like the euro short. If we go back to the weekly, let me do a different weekly. Let's do this one. It went up into this box and chopped around a lot, and now it looks like it's poised probably to come all the way back. Let me draw a box on here. Probably looking for this to come all the way back to this area here. Before it even slows down much. So if you're short the euro, I would say stay short, although we're going to have a little counter trend rally. Let me put a shorter term chart on here, like a 15 or 30 minute. You can see 30 minute is actually good because I use this 30-minute chart sometimes. See, once it broke down through this, see how it used this purple line all the way down, and then it broke through, and then when it broke through the purple line again, the purple line became resistance again. But it looks like it's broken through this time, not for good, but at least until we get a B wave pullback and then a C. And then I would look for this 30-minute pattern to just bounce off this 40-day moving average. It's actually 40-period moving average in this 30-minute chart. That I use that sometimes, and it works really well. Once the market is topped and it starts heading down, you can just almost count it how easily it uses that purple line as resistance. Then it went over it and then started using it again. Went over it, started using it again. And I would say the same thing's probably going to happen. We're going to get some sort of A, B, C up in here, and then this will resume. So we've looked at silver. Let's look at oil. Oil's, we've been paying higher prices in our gas station visits. Let's go to daily. But it looks like maybe oil might be getting tired, so we might see a pullback in oil maybe down into this area around 56 before it stops. And then we'll get some sort of bounce, and then we should see oil move pretty low, maybe retrace this whole move into about 41, which is pretty substantial. Don't know that I'd be long oil stocks right now. Don't know that I'd be long too many other stocks either, especially these FANG stocks. I mean, once the selling begins, you know, Facebook and I mean, this looks very counter trend here. Let's see, Facebook, Amazon, AMZN. These should all sell off pretty quickly, because notice they're the last bit of the trend maker. Okay, this is all just topping process after this. Let's see, Facebook, Amazon, Google, GOOG. This could be the end of these stocks. Finally, I mean, they had a great run, and I mean, if you look back 20 years, look at Google. I mean, it's just gone from $136 is about where they IPO'd, I think, you know, all the way up to $1,186. I mean, that's just an amazing run. So, all right, let's look a little bit at my NinjaTrader. Let's put this on a daily and see what we see in the way of support and resistance. So again, if the market turns up and goes up from here, I would think it runs into this area before it changes direction. And then on the downside, I would say that it runs into this area right here on the downside, and then that'll be kind of the first move or not the first move, but the first move of this section down to new lows. That should take us to new lows. That's kind of the plan right now. So be very careful. Hopefully you're not in any bond funds. We're going to do some more stuff in here soon. I think I want to it's hard to do live trades because everything I'm looking at is on a weekly chart. But we might enter a few trades and just watch them over the ensuing weeks to see how they go. So hopefully that'll be something you're interested in. If you have any questions or comments, just go to YouTube and put them in the comments section. I'll try to read those and respond to them either in the next program or just by writing. But that is it for this week, everybody. Thanks for coming in, and hope to talk to you next week. Take care. Bye-bye.